If stocks crash, what will happen to real estate prices? I'm Bob Stokes with Elliott International. A lot of people have never invested in the stock market and never will. They live by the saying, I'm more concerned with the return of my money than the return on my money. For them, the stock market is way too risky. But many of these same people will plop down a sizable chunk of their life savings on a house or condo, not knowing how long they will wind up living there. Of course, everyone needs a place to live. But the point is that financial risk is often not adequately considered when buying a house. But conservative-minded home shoppers might want to mull over this chart and commentary from the book Conquer the Crash. Real estate prices have always fallen hard when stock prices have fallen hard. The chart displays this reliable relationship. The first edition of Conquer the Crash published in 2002, so the chart only shows data through the 1990s. Nonetheless, you do get a historical perspective. It's true that the 2001 recession provided an exception to the rule. The National U.S. Home Price Index rose $5,500, and prices continued rising through mid-2006. But we all know what happened with the 2007-2009 stock market crash. Home prices fell hard too. Home prices did peak before the stock market top in 2007, but real estate prices fell the hardest after stock prices plummeted. The same thing happened in the late 1920s and early 1930s. This chart from the just published April Elliott Financial Forecast shows annualized U.S. home sales multiplied by average home prices. The new financial forecast says the rise from 2009 is a counter-trend rally that failed to push above its record peak in 2005. Expecting lending standards and other housing market fundamentals to return to what they were at the all-time high represents wishful thinking. In other words, those who are buying homes now may very well be doing so near the top. Indeed, there are still pockets of extreme optimism in the luxury housing market. One example is the Twin Cities. Here's a February 11th headline from the Pioneer Press. Will luxury housing boom help stabilize rents or drive them higher? Our next stop is Nashville, and this April 2nd headline from the Tennessean. Looking for a $3 million penthouse in Nashville? You have options. If stock prices continue to slide, EWI's analysts anticipate that luxury housing shoppers, as well as others who seek to make purchases in the broader real estate market, will find bargains galore in the immediate years ahead. Stay tuned.